morning, everyone. Today is April 9th, 2026, and we have another live trading session. Once again, looking at the same three pairs that we always look at and looking to see if we get any opportunities today. So looking at the perspective of what gold is doing, we know gold has already made the low of the day in London, and we know that it is trading near its current high of the day right now, which was created during pre-New York. So we can see what this is going to do as New York session starts to develop. Again, it is 8:32, so New York session opened 2 minutes ago. So we'll, again, just continue to wait and be patient today, especially since it's a Thursday. And as we've seen, this week has been pretty stagnant so far. And then we have NQ, which NQ, from an overall perspective, we know it is stuck between this previous day low and this previous day high here, which was created on Wednesday. With this previous day low and high being set in the market, again, we will wait and see if liquidity is, again, wanting to either go and take out these lows or go and take out these highs. We're not really sure what is going to happen just yet. And so we will continue to wait this session out to see what happens there. We do know we had internal liquidity here that was broken with pre-New York. And then we know this pre-New York liquidity here, which was the current high of the day, which just got broke by 8:30 open. So again, we'll wait and see what opportunities present themselves here. And then lastly, we have US 30, which, I mean, I'm not the most interested in US 30 just because of how it's moving. From an overall perspective, the 4 hour, we know we had this external liquidity, which price was trying to get to all week. We saw yesterday's price action. I know it looks like it tapped here, but again, if we get really precise and we zoom in here, we can see that it ultimately did not tap this higher time frame 4 hour liquidity here. And it started to revert yesterday, which basically was just pulling back into this consolidation range. Now, from a higher time frame being the 4 hour, this is just consolidation. And then on the lower time frame, again, we would have to wait for a specific move, either bearish or bullish, in order to align with something for today. But the current range that we are sitting in is, again, the high of the day that was created here with pre-London, and then the low of the day, which was created here with pre-New York. So that is basically all of our objectives outlined for today. And again, we will wait to see if anything presents itself. We'll go over news and sentiment real quick. We know that high impact news wise, we don't have anything else for today. We had core PCE price indexes come out at 7:30. And again, the price index came out as neutral, so 0.4% to 0.4%. And then we had final GDP, which is another high impact news event. And we know that that came out as 0.5% and was projected at 0.7%. So slightly lower, which is bad for the dollar. And then finally, this orange unemployment claims, which is just the results from last week's full news release. And we saw we came out at 219K or 219,000. As projected, we were supposed to be at 210,000. And so again, although this is slightly negative, this is bad for the dollar. And if we if we go to that dollar chart, that's exactly what we're seeing. The dollar has been trading lower today, as well as the fact that ever since 7:30, again, we pulled back, and 7:30 onwards has been trading lower. So that is currently the premise we're in right now. And then if we look at these actual full sentiment for today, we know that the Dow sentiment, or the US 30 sentiment, has come out as clearly bearish. We know that the NASDAQ sentiment, once this loads, the NASDAQ sentiment as well has come out as predominantly bearish for today. And then finally, we know that we have our gold sentiment, which our gold sentiment has come out as slightly bullish for today. So once again, we're going to wait and see if any opportunities do present themselves today. But currently, we are just sitting on our hands. Okay, so just dropping in here to give an explanation of kind of what I'm looking at and what trade I'm in right now. So from a higher time frame perspective, like I talked about earlier, we knew that the gold sentiment had came out as bullish. With the gold sentiment coming out as bullish and the 15-minute time frame constantly respecting lower time frame or higher time frame liquidity, and again placing fair value gaps, respecting fair value gaps, and then going higher. This is the premise that I was looking at for buys today. So basically, I was looking at this 5-minute fair value gap that has been formed with the 835 candle. Looking at this pullback into this 5-minute fair value gap here, I took the beginning of that FVG because that's just what my entry model is, with the stop loss resting below. And then ultimately my take profits are going to be internal LQ. And then if we could reach internal LQ, then I would expect us to continue to trade higher, reaching this 15-minute external liquidity. But that's basically everything that I'm looking for today. The only thing that makes me weary about this trade, and that I was looking at, is that on the 15-minute time frame, although we are respecting bullish liquidity, we know there's a 15-minute FVG here, and this is a 15-minute bearish fair value gap that was created yesterday with Wednesday's price. So if we do get stopped out here, we know that ultimately that's all that was being respected was this 15-minute, and ultimately we'll get stopped out from there, and we'll take our loss and walk away. But this is the only trade that I will be taking for this session and for today. And it might actually be the last trade of the week because we know we're going into Friday tomorrow. And as I explained at the beginning of this session, price action has not been ideal lately, but we are still trying to find these opportunities. And like I said, this is pretty bread and butter in terms of what we look at on a day-to-day basis. So we will see if we do end up ultimately playing this position out or if we get stopped out here. Okay, so again, just dropping in to kind of let you guys know how I'm managing this position. So with this 15-minute being here, I would really like to see some aggressive price action in this 5-minute candle. It's currently 8:55, so we know we're going from the 8:55 to 9 a.m. price leg. And inside of this, I would love to see this candle at least break where this previous 8:45 candle fair value gap was. That would give me further and just better indications that we are actually going to hold those bulls and respect this price leg. But that's kind of just what I'm looking at right now. I don't really want to chop too much on the lower time frame because, noise just gets very hectic once we get down to the 1 minute and things of that nature, as well as the fact that we're already in our entry. So being that low isn't necessarily going to help us all too much. And then on top of that, this 15-minute time frame, again, we're BPRing. So if we do lose this trade, we know, once again, as I've talked about, although this is a high probability trade because we are respecting our rules, and this is, again, break of structure, fair value gap entry, this is bread and butter trading plan, we do know that from higher time frame sake, again, price is BPRing. So price is basically respecting its own liquidity, and it's not really creating any fair value gaps. It's not really creating very much momentum in any specific direction. And so that's currently what we're dealing with right now. But again, just wanted to talk you guys through because I know a lot of people ask like, oh, what's going on during the trade? Like, what is your thought process during the trade? This is really it. Once you place the trade, it's for the most part, it's going to be stop loss or take profit. So, there's not really too much that you have to stress about, especially if you're aligning yourself with time, price, and liquidity. But you do also have to manage the trade, and it always has to be if this, then this. So, like I just talked about, if the market breaks lower and we start to break the FVG, well, then I'd be okay with closing this trade out and taking my loss and walking away. If the market continues to respect, then we know that we have further indications to go and get bullish price action. This is a very good indication here. As I just talked about, that's exactly what I wanted to see, was essentially we have 154 left in this candle, but we know that, again, the low of that 845 candle is what would have created a down closed fair value gap. And so as price has stabbed into it, once again, this is another balanced price range. There is no bearish fair value gap that was just created with this price stint. However, again, we want to see this closed above for further confirmation that we actually do continue this bullish price action today. Okay, so it's now 9:05. Again, dropping in for another update. We have basically now started to move towards take profit, which is what we would ideally want to see for this trade. I will say we are now going to start micromanaging this from a 5-minute perspective, especially given that we know how liquidity is moving and we know we are in price. So all I mean by that is we now have seen that if we take the drawings off the chart, we had this 835 fair value gap. The 835 fair value gap is what I took my entry off of. We've now created a low at 850, and coming into 9 a.m., we've now again started to try and trade back bullish. So with this micromanagement, we know that our stops are currently under the 5-minute fair value gap. However, my mental stop, so basically where I would ideally like to get out if we can't show significant price moves to the upside, would be below 5-minute structure. So we know that we have stabbed into the FVG. We have created a relative low here inside of the FVG. So we can now mitigate risk. Instead of risking 13 points, we can now be risking 10 points, because we know that if price does stab back and it takes out this bullish candle and then starts to trade lower, we would not want to hold this all the way back down to this low, since it's already respected it and closed outside of it. So that's basically the premise of, again, just kind of what we're looking at. We still have bullish intent. We still have gold coming out as bullish sentiment. We still have the dollar currently trading in this bearish macro, even though it has started to slow down, but the 15-minute was trading in this bearish macro. So everything is still supporting the bullish price action, but again, still have to manage risk and mitigate risk whenever price starts to move in your favor. So that's ultimately what we are looking at. And then in terms of where we're looking at take profits wise, like I said, this is our first internal liquidity pool. So this is the first place I would kind of be looking to break even on this trade. If we can run this high, and then, as I've already explained, relative highs above that would be our ultimate objective. So since price is basically just consolidating right now, I'm going to drop in again and just kind of talk to you guys about probabilities. Although you guys see me sitting through this and being patient, as I talk about on a day-to-day basis when it comes to trusting your entry, trusting your model, and understanding where price is basically residing, as well as where liquidity is resting, this is still horrible market conditions. And I just want to make that very much known. Ideally, on a normal day, whether I win this trade or lose this trade doesn't mean anything. However, on a normal day with normal volatility and normal volume, and as a lot of people can vouch for who have watched my videos for a long period of time, I'm a very much time-based trader. So again, I've explained that. You can go back and look at multiple videos. No reason for us to get very much in-depth into that. But on a normal day, with this entry being here, coming into 9 a.m., this would have already swept this. This is a 40-point price move to full take profit. This is a 24-point price move to the first take profit. And again, that on gold is usually getting swept within the first 15-minute candle, within a couple 5-minute candles, things of that nature. So again, that's really the main thing that I kind of wanted to explain here, is that although we are in the entry, although we are being patient, although we are respecting price for exactly what it is, this is still low probability trading conditions. And again, you want to be aligned with speed. You usually don't want to be sitting in trades, whether in consolidation, especially if you have a time-based model. But like I said, we respect our analysis. We respect what the sentiment is telling us. We respect what all the pairs are doing, as well as what gold is actually doing in front of us. And so we're kind of just sitting through this chop fest to see if we're going to get that expansion. But yeah, I just, again, wanted to reiterate, this is still low probable market conditions. You still want to be really heavily trying to save yourself for times when the market has high volatility, high speed. It is showing consequent encouragement to try and actually get to your objective, whether that be buy-side liquidity or sell-side liquidity. But yeah, we're continuing to sit through this. The ideal, as I've talked about over and over again now at this point, want to see candles close above this 15-minute fair value gap. Once we start to get candles actually close with bodies above this fair value gap, we know that we'll have much more momentum to actually get to the upside and get to these buy-side objectives. But as talked about, we are just sitting through this consolidation right now and being patient. But this is still our hard stop here, especially while being in consolidation. And again, this is what I talk about when it comes to risk management. You don't want to take this full loss. You don't want to be still holding this trade all the way down to full stop loss, especially if you know, again, we've been consolidating. Since we've gotten, let's just take the price action overall from the session, right? We know low to high, we've moved 17.9 points in this entire session. So very low volume, very much consolidation profile. So just sit on our hands and wait to see if we're going to either take that take profit, or if we start to break lower, like we talked about, mitigate risk, make sure that you're not taking full losses. And this is how you make sure you stay ahead of the game when it comes to risk management and making sure that you're keeping way more profits than you're giving away to the markets. Okay, so another update, I'm basically mitigating risk again. I'm now basically looking at this as my hard stop. The reason I'm looking at that is because if we look at the dollar's respecting a 15-minute or a 5-minute fair value gap to try and go bullish, as well as the fact that, again, NASDAQ and NQ are now flipping to be bearish. So with those two things, I'm basically taking this as my hard stop now, which we're basically floating in between. And boom, we get stopped out. So we're going to walk away for today. Like I said in the last voice message, this is just consolidation price action. It's already 9:20. I know that, again, although we are still with bullish intent, the way that we're moving is in a full-blown consolidation profile. We don't want to give up more profits and just continue to sit through this consolidation. And yeah, just further explanation as to why I closed that trade where I did. Look at what the dollar is doing. So the dollar has now broken structure here. This was pre-New York structure. We know that we have 830, which is here. 830 is what broke that structure. After breaking that structure, we've now tried to sweep higher. We created a 5-minute fair value gap, and I saw at 9:10 we were actually starting to respect this. Coming into 9:15 candle, we were expecting this to go bullish. And like we talked about, NASDAQ and US 30 are both showing bearish intent right now, looking to trade to their low of the days and then probably their previous day's low. So with that, we're just going to walk away from this gold trade, save our capital. And again, either we'll be back tomorrow for final trading session of the week, but it is Friday. And again, as an overall premise, we have seen what the week has done from Monday. So this is gold from Monday. Again, hasn't really had very much movement whatsoever. Took out previous high of the week, traded back into the range. We expected this range to be an expansion today. Ultimately, have not gotten that expansion yet. And so we will see how the market conditions look tomorrow during New York, but we will most likely be done until Monday. And then hopefully next week brings some better, more clear price action. But again, if you guys have any questions, comments, concerns, let me know. And yeah, that concludes today's trading session.